Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP as well as the vast majority of finance. Let's just dive in and let's start off with this tweet here. And we do see from Finance Law, the SVB bailout was about bailing out the 10 Chinese billionaires who had $13.3 billion in the bank. The cover story is they're saving us, but in all actuality, they're buying the wealthy time to get out. This has been a thing even within crypto. Remember going all the way back to Terra Luna collapsing, which I do believe was fully planned from regulators. The rich were the ones that actually got out just in time. But yes, this is absolutely insane. Because remember what I've said about the banking sector. They do not care about you or me. They care about the wealthy. But hey, this is how the traditional world of finance has always worked. It has worked against you and me and those that are not rich. And it happens history after history. And listen closely to this video.
It has been reported publicly that SVB had a large number of Chinese investors that are there, including some that were companies directly connected to the Chinese Communist Party. Will those individuals, companies, entities, and investors that are Chinese investors be made whole based on assessments in my banks in Oklahoma? So what I'm asking is, will my banks in Oklahoma pay a special assessment to be able to make Chinese investors whole from Silicon Valley Bank?
Uninsured investors will be made whole in that bank, and I suppose that could include foreign depositors, but I don't believe there's any legal basis to discriminate among uninsured.
It has been.
And even if we look down here, we could see 10 depositors had $13.3 billion in SVB. That's why the FDIC bailed them out. This wasn't about systemic risk. It was about bailing out the billionaires who were caught. And I'm telling you right now, if you have money in the bank, it is not safe. Because guess what? The FDIC cannot bail out everyone. They only have I think the last time that we checked, it was like $180 billion worth of actual reserves. They're not going to be able to cover everyone. Absolutely not. Now, there was an incredible question that came up. And we do see here from Caitlin Long. This is the question in banking right now. Is the bank's business model of borrow short term and lend long term with leverage fundamentally incompatible with the era of online banking, whereby bank runs can start suddenly and finish fast? See how Barr answered Loomis. Listen closely to this. It's about a 25-second long clip.
Is fractional reserve banking overly risky in this age of online banking?
Senator, let me just say, repeat what I said before, which is that overall the safety and soundness of the banking system is strong. Banks are safe and sound. Depositors should feel assured that their deposits are safe.
And again, remember, it's always, oh, it's all safe. It's all safe. Everything is safe. You should feel safe, especially when you're depositing your life savings. See, this is the biggest problem around the banks, is they're not safe. We continue to see media and these big bankers play this game of, hey, the banks are safe. It's safe. It's safe. They always throw that word around. Now, also, talking about this, yesterday I reported on the fact that CNBC was removing the CDS, the credit default swap data, from multiple banks. Today, we've seen this. Top ECB official claims the credit default swap market contaminates bank stocks and contaminates bank stocks and could threaten a run on deposits. Oh, come on. Sharp moves in thinly traded credit insurance needs scrutiny. I'm telling you right now, when we look at the credit default swap market, they're already hiding this away from us. This is the same exact data that triggered a lot of individuals to go out and take their money out of banks in 2008 before the things really started to break down. But remember, what mainstream media will do is they'll hide everything from you. They'll take all of this data and say, "Hey, we cannot have this, see the light of day." No, absolutely not. And remember, I just talked to you guys a little bit about Deutsche Bank and their CDS. Now, what is also happening is we are seeing a significant push away from the US dollar, which is also why I've said crypto should 100% be in your focus right now. This combined with gold, silver, and also even tangible items. Because guess what? When the banks really start to collapse, everything around you also skyrockets in value. I've been looking at, a ton of things. Food, water. I mean, this is what everyone should be accumulating right now as well. What do you see? Former chief economist of Goldman Sachs is advocating for BRICS nations to expand and confront the dominance of the dollar. Suddenly, people are paying more attention to central bank gold purchases. They've been buying gold for over a decade now. And again, we've seen accumulation of gold for decades even before, but 2010 was when we seen a big shift from Russia. We also seen China become a major player within the gold market, as they always have been, but in 2010, things really started to pick up. And now, over here, we do see the public acknowledgement, by the United States Treasury Secretary that countries are exploring alternatives to the existing reserve currency is signal. The trend is very clear. For years, I have said gold and the US dollar will be the final showdown. This is why many fear gold. I'm telling you right now, the signal, right? The signal has been flashing red. This is the alert signal that, guess what? Get out of the US dollar. It is finished. There is nothing holding a tangible value to the US dollar right now. The petrodollar deal, as we know it, has been basically finished. It's over. We've been watching it. All of the events. And then we seen this. Remember, I already just talked about Saudi Aramco. I talked about Saudi Aramco, one of the largest energy distributors, moving away from the US dollar. We've been focused on Saudi Arabia so much in the last couple months because they have been making major moves in silence. And now, Saudi Arabia partners with China to build a Chinese oil refinery for 83.7 billion yuan, $12.2 billion. I want you all to realize what is happening. Things are happening rapidly. I've said it. A lot of people scolded me as well. I seen it in the comments. I was saying things are starting to move extremely fast. Everyone was focused more so on price. Things aren't moving all that fast. This goes all the way back to the summer, right? Summer of 2022. I was talking to you guys a little bit about BRICS and how they were expanding rapidly. Everyone was like, what is happening rapidly? There's nothing happening. Well, guess what? Now you are seeing just how fast things have been moving. Partnerships have been being created between foreign nations to move away from the US dollar. The US dollar as a dominant reserve currency is finished. It is no longer a reserve currency. And mainstream media just recently started talking about this, but we have been addressing this for over a year now. Since March of 2022, when we sanctioned Russia, that is what ignited this push away from the US dollar. And also, we do see over here, new Saudi Arabia has inked an 80 billion yuan deal with China to build a Chinese oil refinery. Are you paying attention yet? Our adversaries are teaming up. China is loading up on gold. China and Russia have penned their alliance. China has mediated a peace deal between Iran and Saudi Arabia. Saudi Arabia is considering accepting the yuan instead of the US dollar. Our adversaries want to crash our economy, and the US dollar is on the path to lose its world reserve currency status. All this in just 2 years of a Joe Biden presidency. Buckle up. And I'm telling you right now, everyone should be focused on what's happening with the BRICS, because it is, I mean, the US dollar is on a lifeline right now. That's exactly what's like when we look at what's happening around the world. We are seeing the alert. I mean, it is flashing. The signal is flashing red. The US dollar, everyone is moving away from the US dollar, and if you are in the US, you would not be holding the US dollar, especially in banks. I see a lot of people I talk to that are saying, "No, I'm accumulating the U.S. dollar. I'm holding paper cash. I'm holding paper cash." Problem is the fact that the U.S. dollar itself, the value of it, is going to drastically drop. Inflation is killing the dollar as well. All of this combined is a recipe for disaster for the U.S. dollar. This is why I have been buying physical. Physical is the key word there. Gold, silver. I've been buying and accumulating a ton of crypto. I've been buying tangible assets. I've been buying food, water, stockpiling. Also, I know that a lot of people out there want to look the other way, but it might not be a bad thing to weaponize yourself as well during these times, because anything is possible. I mean, on the forefront of things, 2008 was pretty rough. You were around during 2008, you know this. But this is a lot worse than 2008. Now, what is all of this leading up to? What is the big elite finale? The elite finale is loading. It is nearly here. And what is it? Well, over here, radar hits. Breaking. Banks will lose control if they don't use a central bank digital currency, says Christine Lagarde, ECB president and convicted criminal. Listen closely to this video.
Where do we stand? We central bankers, we have been operating as a monetary anchor in relation to the commercial banks and the private money. If we are not in that game, if we are not involved in experimenting, in innovating in terms of digital central bank money, we risk losing the role of anchor that we have played for many, many decades. And we have historical examples of period where the central bank monetary anchor was not there, and that precipitated crisis after crisis. That certainly was the case at the time of the free banking in the 19th century. Do we want to go back to those days? Probably not. I would say certainly not from our vantage point, as a result of which we have to respond to the demand for those digital payments in order to maintain the role of anchor that we have been playing regularly.
And the problem here is that, one, central banks have failed. They have failed time and time again. But the biggest issue is, and I've seen a lot of people doing this, they say, well, CBDCs are really good for XRP and QNT. CBDCs are not good, no matter how you look at them. It's not some, conspiracy theory on, oh, well, no, it's just fear-mongering around CBDCs, it's propaganda. No. CBDCs are not good. They are not good, no matter how you look at them. Listen, I would love to be wrong. I would love to be wrong. But when you see the trials around the digital euro and how they want to limit you on your monthly expenses, they want to limit you on what you can buy, they want to take, control of what you can buy, they want to, put you on this credit system. Like, there's a lot of problems around these CBDCs. And we need to fight back against them because they are moving extremely fast. And we do see over here, the Bank of Japan says central bank needs to be ready to issue a CBDC to offer the public a safe digital payment system. They always say these buzzwords: safe, it's secure, it's for security, it's going to counteract cyber attacks, blah blah blah. They always make sure that it sounds as great as possible for you. The best way that I look at this is They're pretending to be the savior around how CBDCs are going to counteract all the negative inefficiencies around fiat currencies, and it's going to make it so much better. We're going to march into this digital age of finance, blah blah blah. Like this is this is all control. It's all control. They want these CBDCs because they can control these CBDCs. They can't control XRP. If I made a payment tomorrow on XRP, nobody's going to shut down that payment. Nobody's going to cancel that payment. That payment, I'm going to send it, right? I could send $755 million, because that's what it was the other day. $755 million in 4 seconds at 1 penny as a fee. You're not seeing that anywhere else. You're not going to be able to do that with the CBDC. You're not going to be able to, what we are seeing around the world of finance is control being in question, greed being in question. This is a big issue. We need to focus on it. And also, the overall goal of all of this, well, it's cash eradication. I seen this post, and this post is a perfect description of what's happening. We do see cash cannot operate alongside CBDCs. When banks go pop, everyone flocks to withdraw their cash, which the banks do not have. Cash also means money going under the radar of the pigs who retain power and influence from taxation. The system is slowly being manufactured to collapse. You would be surprised how many people are still oblivious to the concept of fractional reserve banking. So-called economic stimulus has gone too far and was never intended to be something that led to a recovery or a genuine growth. The system is slowly falling apart, which is intentional. They've milked the profitability of the current system for themselves to the fullest, and the Ponzi can no longer sustain. To introduce the CBDC-based system, the current system must be demolished, which we're seeing teasers of now. The only victims of this will be us, the people. They need us, the people, to adopt the new system in order to rinse and repeat the process all over again. There's no easier way to achieve this global adoption of CBDCs than the generation of mass fear and lack of trust developing in banks. That's why they are pushing this. Hey, CBDCs are safe. It's going to limit risk. It's going to do this. No. Rest assured, it's the same entities behind the current system that will be in the driver's seat of the new system. Consider it a relaunch of the same product with new packaging and additional extras. Yes, this is the biggest problem. I want you guys to understand that they're, creating this problem, they're creating the solution, they're selling you on the solution just to repeat the same exact problem over again. And remember, going all the way back to the beginning of this, yes, the rich always get bailed out while the poor continue to get screwed. That's exactly what this is about. They want to control it. They want to, be as greedy as they always have been, and all of which, guess who the victims will be? You and me. That's all it ever is. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys have more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As I hope that you all have a beautiful day or a beautiful night wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.